Hello, this is Folger coming from Pleasant Hill with Security National Mortgage. So we recently moved our office to Pleasant Hill and we're lucky enough to move next door to some great people. Most specifically, I wanted to provide something that was a little educational and also introduce my neighbor here because like a good neighbor, he is next door. So not only is he an experienced insurance person, but he's also the Pleasant Hill Citizen of the Year for 2015. So I'm lucky enough to have my partner in crime next door, Matt, here, and I want to have him introduce himself and tell you some of the biggest mistakes people make with insurance.
Hey, thanks a lot for having me, Folger. Really appreciate it. Today I was going to bring a couple things I see commonly on homeowners policies that I come across. My name is Matt Wren, the owner of myagentmatt.net. If you want more information about me, I've been in the business for 8 years and an agent for one of the largest homeowners insurance companies. A couple things I saw were some advice I would recommend is document your property. What I mean by that is just take your video camera. Most of us have these smartphones these days. You can just walk around your property and do a little video, kind of narrate as you're going through. Especially pay close attention to like your finer things like jewelry, artwork you have on the walls. If there was a total fire loss, you got to kind of recall everything in every room. I don't know if you want to try to close your eyes for a second, try to manage everything in your living room right now today. There's a lot of stuff and I can't remember all the things that are in there. So just having some kind of video. If you don't upload it to the cloud, if you do it to a computer, a little thumb drive, zip drive, make sure you password protect it, but give it to a trusted family member or friend offsite, so that way we can always access it afterwards. Another thing I see a lot of people do is some people carry a really low deductible, like $500 or $1,000 on their homeowner's policy. You're paying a lot extra each year just to keep that lower deductible, and most people don't have claims. You go 20 or 30 years without a claim, but you're paying a lot extra each year to keep that lower deductible. So you're going to save yourself hundreds of thousands of dollars by just carrying a $2,000, $3,000, $4,000 deductible. Whatever's convenient, comfortable for you. If something did happen more serious, could you come up with $2,000 or $3,000? Most people have that on a credit card or line of credit, something they can access.
So what happens? Most people kind of prepare for the worst and assume they may have something, so they keep it low.
Yeah, and some people are scared that $1,000 is a lot of money, $2,000 is a lot of money. But to do that, you're paying a couple extra hundred each year. And so if you do the math of going, 10, 12, 20 years, you're talking thousands of dollars in extra money you're paying the insurance companies.
Got it.
That you could be saving for yourself. So if that day does come, you've already had that money. If you're a good saver, you set it aside, the difference, hey, that's more power to you. But it's just a little recommendation that we have to try to help you out a little bit and save some money every year.
Awesome.
Another thing too is liability. We're in California. Unfortunately, everybody loves to sue everybody in California. And liability really comes into play if you own a pool. They're great, a lot of fun, but unfortunately accidents do happen around the pool. So you want to make sure you protect yourself from lawsuits. The basic homeowner's policy only comes with $100,000, which is good protection. But if you're talking about a slip or fall, somebody cracks their head, you can think of some more serious things. We don't want to gross you out too much. But for really a couple more dollars, go up to $300,000, $500,000, go to $1 million. There's something called an umbrella policy, which kind of gives you better coverage above and beyond. But really look at your liability. Also, if you have young children, I have 2 young daughters myself, 2nd and 3rd grade. Some of their friends come over for a play date at the house, and as much as we're friends with the families that come over, something happens, one of them could easily try to sue us, and then we've lost everything. So just kids being kids, sometimes you just want to make sure you're protected, and your liability is what you really want to protect. And I'm a dog lover, so just sometimes some of those claims as a pet owner, if your dog bites somebody else, or hopefully nothing serious, but that lawsuit that comes out of that goes against your homeowner's policy. So you always want to make sure that you're protected there.
I'm not a dog guy, but I have 2 little boys, which is kind of like having 2 little
It
dogs.
is, they're little ankle biters. You want to be careful. So, but boys being boys, you climb up a tree and one kid falls out of the tree and they're at your house, your property, unfortunately.
Yes.
Some parents are good about it. Other parents are like, hey, I'm going to sue you for everything you got. So just kind of look at couple extra dollars each year. You can just save yourself a lot of heartache if that ever happened.
Good.
Next thing is jewelry coverage. Some people have a lot of jewelry. Some people don't have jewelry, depending wherever you are. But most homeowners policies have a limited amount of jewelry protection, either $1,000, $1,500 per piece. Some have a total aggregate, which means the total collection, like $2,500 would be the most they pay out. So you want to make sure you check with your insurance company or insurance agent and just see what those coverages are, and see how you can document it before something ever happened. There's usually a rider or a separate policy you can do to protect that, and for really not a lot of money, and it'll give you some better protection too. especially if you like to travel with jewelry. You know, some people like to take a lot of trips. You want that worldwide protection that your jewelry is covered wherever you go. So those are kind of little things. And then last but not least, just make sure you have the proper names. You know, if you're a husband-wife couple, you have both your names on the policies. If you've gone to a financial planner or an attorney, you set up a trust, make sure that you have the proper names on there. If you have the trust, if your property's in the trust, to make sure that that's all taken care of. Because unfortunately, what I've seen with a lot of older clients, sometimes the husband took care of all the financial matters and never had the wife's name on anything. And then unfortunately, he's passed away, now she's the widow. And without her name being on these policies, she doesn't have any rights to these policies without a lot of hardships. So just make sure that you guys are all taken care of on the policy. But obviously check with your own company and your agent just to make sure, ask them all these questions and follow up, and hopefully it'll help save you some money, give you a little better coverage, and hopefully nothing happens to you and you won't need any of this. But if it does, you'll be happy you did.
All right, so how do people contact you, Matt?
Oh, if you want to contact me, you can find me on the web, myagentmatt.net, or my phone number is 925-671-0222, and I'm always here to help answer any questions you have.
All right, and for me, we're located at 140 Gregory Lane, upstairs in the 200 section. Folger, any mortgage questions you have, you can reach me, 925-695-2740, or online, folgerloans.com. Thanks a lot, and this has been an edition of Know Your Neighbor.
Thanks, Folger. Thanks for having me, guys.